Do you want to look at GSK?
Let's do it.
This is a British multinational pharmaceutical company headquartered in England. England.
Where are you going? England. What's that from?
Wayne's World, right?
Wayne's World.
Oh, gosh. 2, because they go...
Of course it's 2.
Got it. GSK is the ticker symbol, guys. Let's get after it.
$91 billion company.
91.
PE of 15.9, check. Profit margin of 16.9, check. Off the dribble, free cash flow last year was 6.2. They paid out dividends of 3.9. Very hefty dividend yield, 4.3%. Very, very hefty.
Wow.
That's a nice dividend yield. 5-year return on invested capital, a little light, 5.7%. Really light on the return on assets. So here's an example of a company we want to see around 10% or so. The market's going to do about 10%. So in order to justify this, we got to see a big discount. We got to see a big discount on the company in order to justify a low invested capital. Invested capital is the amount of money the company basically makes on its capital. Like when it reinvests its capital in itself, either through debt or equity, they're making about 5.7%. That's not very good. Okay? Over long periods of time, according to Charlie Munger, a company will probably make about their return on invested capital in terms of the growth of the company. Now, if you buy it at super discount, because I won't get into that right now, but right now we have 2 check marks.
Speaking of growth, we did hit, Paul, yesterday we hit our first 1 million views on our channel.
That's right. We did hit 1 million views on our channel yesterday.
So we thank you all out there.
850,000 of them in the last 3 months.
Incredible. Thank you all out there for watching, of course. And of course, our patrons, I love you. Let's keep going with GlaxoSmithKline. And pillar number 3 is revenue growth. Paul, what is it, baby?
27.9 to 34. So check mark there. Definite check mark there.
Profit growth. Pillar number 4.
Net income, 912 million to 5.75. Massive check mark there. Yep. So guys, we're seeing, but remember, go look at previous years. 8.5, 2.7, 5.4. So I don't know what happened here, Sethi.
Mm-hmm.
They probably had a big special. Yeah, they did right there. 8.2. Okay, that's why there. They had a big loss there. Okay. All right. So these are the things you have to look at, guys. When you see big jumps in profit, you can understand why that is. $8.3 billion. They probably sold something off and made $8.3 billion on it. Number of shares outstanding. X, but not by much. 2.43 billion to 2.49. I find with European companies, they don't issue or take away a lot of shares very often. Have you noticed that, Uncle Seth?
Don, will you make sure you get GSK up in the top right corner? Again, folks, we're looking at GlaxoSmithKline out of England. GSK is a ticker symbol. Paul, talk about the shares again. I'm sorry, I missed you.
They're slightly up. So it's an X. It's slightly up. Okay. European companies, for some reason, don't tend to issue many shares or take many shares away, I've noticed.
Okay. How about pillar number 6 is current assets over current liabilities?
20 billion versus 22 billion. So that's an X.
Uh-oh. They're under?
Yeah, they're under. But they tend to be under for the last few quarters.
Oh, boy. Why do you use free cash flow to determine the value of the company? So go over this one more time. What we're
Great question. Next. I like free cash flow versus net income because net income can be affected by accounting charges, SEC rules, accounting IRS rules, while free cash flow is cash in, cash out. Can it be manipulated? Yes. Is it harder? Absolutely. But free cash flow at the end of the day is what the companies will use to pay dividends, buy back shares. It's the actual money in your hand. If you had a company that reported $1 billion in profit every year, but only got cash of 200, do you really care about the $1 billion in profit? No. You're gonna be like, well, wait, I want the 200. You're gonna be like, I'm gonna get the 200. I don't want the two. I want the higher number. Over long periods of time, free cash flow and net income should equate, but it's also a way to look for fraud and things like that. But I like free cash flow because at the end of the day, free cash is what drives a company's value. It's what drives company value because that's the money that comes into the company they can use to pay out all these other things that are good for investors.
Nice. Sean said that GSK is cutting their dividend too. He thinks they're struggling. So.
Oh boy.
Yep.
Okay.
Are we on to free cash flow growth?
Yes, we are.
Look at it. Sorry, go ahead.
Okay, so free cash flow is cash from operations less capital expenditures. Last 5-year average is 5.7 billion. It was a check from 5.02 to 6.2. What was it? Market cap? 92 billion.
91.
91 divided by 5.68. That is definitely less than 20. So check mark there.
Pillar number 8.
So we have a check mark for both 7 and 8.
So we have all checks besides shares outstanding and current assets over current liabilities with a 4.3% dividend. This is for GSK. What do you think, Paul? You're stumped here at the moment.
I'm not stumped. Why does he think it's struggling? Why does he think Bristol Myers is struggling? I mean, GSK is struggling.
Nashad, maybe you can tell us.
Did you look at their 10K?
10K?
Yeah.
No.
Oh, okay. Let me see if they even have a 10K.
I'm willing to bet they have a 10K.
Well, in the sense of like versus the European version.
Okay, while Paul pulls up the 10K, Mo, you want to get after it a bit
Yeah, sure.
with the GSK?
All right, so we for sure have some variation of a 50% rule stock right here. And those of you who don't know what the 50% rule is, you have your high, you have your low over the past 18 months, and then there's that middle range where the stock cannot break through. So I'm just gonna draw this 50% line. And that area creates what is called overhang. And overhang is just negative pressure pushing down on the stock. So every time that the stock starts moving up on you like this, people that were they go and sell and they take their profits, and the stock price comes back down. Again, it makes a little bit of a run, comes back down, and that just continues to happen over and over until there's something big that happens. And maybe this is what you guys are looking up right now. Maybe that's going to be what propels this thing through. From a short-term perspective, though, let's zoom in and see what you can do. Just moved into the sweet spot, which is great. You have a bid and ask difference of 1 cent, which is perfect.
Bid and ask.
If you want to do something with this, you absolutely can. This would be good. You just need a green engulfing candlestick over yesterday's high. And what I would ideally like to see is that this red line continues to move up towards 80%, and on you go making money. Just know that because you're in that overhang region, probably start taking profits around this $40 a share area. So you have about a little under $4 to run to get a trade-off.
So the 10K doesn't exist because it's a foreign. So I just went and Googled it, and I went to their website. Well, there's a lot of drugs in this pipeline here. Look at all this right here.
Those cancer drugs, Zejula, that's very big in the ovarian cancer world, and it's very effective.
Phase 3s, 1, 2, 3, 4, 5, 6, 7,
I think Zejula is a
8,
big
9,
revenue
10,
driver.
11, 12, 13, 14, 15. 15, phase 3 for sure. Guys, there's a lot here. This is their pipeline. Anybody saying their pipeline isn't good? I don't know. Maybe unless these drugs. Remember one thing, guys. Having a pipeline is one thing. Having that pipeline mean something and add actual value to the company that these drugs are actually very marketable is a different thing altogether.
Yeah, you got to execute.
Well, not only execute. I can make a pipeline for a drug that will help me fight drywall and infection. I just made something up. The whole point is how much does that matter?
And how much revenue does it drive?
That's my point. Yeah. How does it matter? It doesn't matter at all,
yeah.
so it's not going to drive any revenue.
But those diseases that it's talking about, I mean, those are big popular diseases. It wasn't like that one that we were looking at the other day.
They're not popular in the sense of like people want them.
People have the disease.
I know.
Like that one we looked at the other day, it was like Lambert-Eaton syndrome, and 3 million people in the world have it. So these are different ballpark.
Yeah, so there's a lot of drugs in this pipeline here. So I guess your next task is to sit there and see which ones have the most market potential here. Like oncology. I mean, oncology is always a very popular. I mean, people are not going to stop getting cancer.
It's been about 3 minutes, and I haven't been on the show. And since it's all about me, I'm going to bring it back home to Paul. What is your final take on GSK? What do you think, baby?
I'm not entirely opposed to it.
Mm-hmm.
But again, just like everything else in the drug world, in the drug pharmaceutical world, you got to understand what you're getting into. Are they going to be able to generate a lot of revenue off this pipeline?
You know what we should do?
What's that?
We should have a drug show that's all about drugs and bring in a doctor and sit with us it's gone through the pipelines and talk about them.
Yeah, maybe.
Well, basically all of these come down to what are the pipeline? You got to go through it. Maybe they'd know something.
Yeah, I mean they do, but it's also one person's opinion on it. Like even though we ask our fathers, it's
better than our opinion.
What was that?
It's better than our opinion.
Well, maybe, or somebody else can go sit there and do more research and go, okay, let me go find out what. Because I'm sure there's a website out there with doctors who assess these drugs.
Yeah, there's blogs.
Yeah, that's the thing to do. That's part of like the in what's his name's book, Common Stocks and Uncommon Profits. Philip Fisher. Mm-hmm. What's he call it? He calls it the what's he call it when you go talk to people? Not the brouhaha. The what's it called when he goes and talks to people? It's like it's that term he uses.
What's
like,
scuttlebutt?
Scuttlebutt.
Yeah.
Something like that, where it's like go out there and talk to people, go read and talk to people in the industry and see what this company's actually doing.
Yeah.
For very little effort, you might find a lot of information on these people. You have to read the 10K. Just go Google. In fact, Sven Carlin talks about use Google to your advantage. Go Google everything you can to find out about the company right then and there. It's just Google. There'll be a lot of scandals out there with scandals. It'll tell you, if you want to Google each one of these drugs, they'll tell you how important it probably is. For For the amount of time you guys probably spent researching the next car you're gonna buy, you probably researched 5 companies and their pipelines. Just do that.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.